to this launch event for our work on whether people should be able to access some of their pension savings in order to support home ownership. Hopefully, most of you are familiar now with Nest Insight, with who we are. But as a reminder, we're a public benefit research and innovation centre founded by Nest. Our mission is to find solutions that work to improve the financial security of low and moderate income households, both today and into retirement. That work is funded by Nest and a range of funders and partners, to whom I'd like to say thank you for making all of our work, including this project, possible. In introducing this work, I should start by saying that I don't think we've ever worked on a topic which has generated quite such strong views right across the spectrum of possible attitudes towards it as an idea. In amongst that strongly held range of views, we didn't get into this work to declare our own. Over the last couple of years, we've been aware that this is a topic that's been sort of rising up the agenda and becoming more prominent in terms of the focus placed on it, especially in pensions policy discussions. We've held panels on it at some of our events. We've been to and participated in other people's panels, and we've seen proposals emerge which have at least nodded to the idea from a range of influential organisations. Some advocating, some nodding towards, but certainly a greater appreciation that this is something that could be of interest. Often, and for understandable reasons, those proposals are based on both sort of international experience. We know that this is something that happens in other countries, and also on a kind of reasonably strong intuitive sense that this might be a good idea. Private renting at later ages is on the rise, and the simplifying assumption that the pension industry has historically used around retirement income adequacy, that housing costs essentially fall to low or zero in retirement, is increasingly hard to sustain. At the same time, we, the UK, have created a broad-based, near-universal pensions saving system through which many of those who are unable to save for a deposit on a home are at the same time building sort of meaningful savings and wealth balances in their pensions, and that's often their only or their main form of saving. So it's kind of easy to see where the logic and the intuition and the attraction for this idea comes from. But of course, neither international examples nor intuitive appeal can explain whether and how something like this might actually work in our system with our rules, our history, and the idiosyncrasies around both housing and pensions in the UK. This would be a pretty massive change to the retirement system, and so our view has been that more evidence is really needed to help inform the discussion, and that's what this work seeks to provide, at least in an initial kind of contribution towards a more informed overall debate. In a couple of minutes, I'm going to hand over to Anna, who's led the work and is going to take us through the headline findings, and then we've got a really fantastic panel discussion that's going to respond to the report, and I suspect will reflect at least some of that range of views that I referred to earlier. There'll be plenty of time for questions and for discussion with our panel, so please be thinking about what you'd like to ask, and as I said before, you can submit those questions through Slido, or we can come to you in the room when we get there. Before we do, though, I'll share a couple of my own reflections about the work and some of the headlines that I would take away. And the first is that it's really clear that for some individuals, there could be a very strong potential benefit to an idea like this. By our estimates, and this is consistent with things we've seen from other people, the cost of renting through retirement could be around £190,000 on average, or on a reasonable kind of set of assumptions in certain areas around the country. And private pension savings is not going to cover that for most people. Taking by comparison, small sum of money from your pension saving in your 30s to avoid that cost is kind of undeniably going to be good for that person's financial outlook, both in working age and in retirement. And that's before you get to the fact that they'll also have acquired an asset by the time they retire, which gives them both physical and emotional security now and in the future, and can be used to contribute towards financial health in retirement. But as our work, I hope, makes clear, and you'll see as you get into the detail of the report when it's launched tomorrow, the scenario where accessing pensions is sort of the only or the binary way in which someone can afford home ownership isn't likely to be true for that many people. And at the same time, the design of any policy would really matter in determining how many more people might be able to or choose to access some of their pension savings when they might not strictly need to. And that's where it starts to get a bit more tricky. For these people, there's a clearer trade-off in terms of their income adequacy in retirement. But at a system level, there are also some significant reasons for caution. One is that introducing too much liquidity of a liquidity requirement into the pension system could be in conflict with kind of other trends and directions of travel in that space. For example, towards more illiquid investment strategies, or indeed on towards shared risk models like CDC. And crucially, the more money that's being used from within the retirement system to flow through into home ownership, the greater the risk of simply driving up house prices and undermining the extent to which people might ultimately benefit, moving it from a benefit to a distributional effect. Underpinning all of that is the reality that in the UK, our DC system is still pretty immature relative to others around the world. So you'll see many people here will be aware that similar ideas have been discussed either already in place in other countries or are actively being discussed. Some of you might have noticed that the US, Donald Trump, over the weekend announced a similar set of ideas for their system, which was kind of him in rolling the pitch for our research launch this week. And it's also under active discussion in Australia. But it's worth noting that in Australia, the median DC pot is about 175,000 Australian dollars or £90,000, much higher than the median pot size is here. So the question can't just be, is this a good idea in theory? It has to be, is it a good idea here, and is it a good idea now? There are a lot of debates across both pensions and housing policy right now about how both areas should evolve. And I guess one question is kind of how near the top of either list should this idea be relative to other things that might be under consideration? Specifically in terms of pensions, the success of auto-enrolment to date means we should be really, really careful in making big changes to that system without understanding what the impact might be. And on the housing side, the risks of ideas like this simply driving price inflation need to be taken really seriously. And so at the very least, we should probably be thinking about this kind of thing in concert with also thinking about how to address the undersupply of affordable housing. It's also worth saying, and just finishing with the observation, that this was an exploratory piece of work for us. We think it's thorough. We hope it's really useful. It's taken place over a 12-month period. But if you contrast that, for example, to the almost 10 years of data and real-world evidence that we've gathered around ideas like sidecar saving, and it's perhaps worth reflecting that this conversation is nearer the beginning than it is the end in terms of understanding the sort of relative merits of the argument. Nonetheless, as I said at the outset, there are a wide range of views on this topic. We really look forward to hearing some of those today, both from our panel and from the audience, and we offer up the research as a contribution to support the debate. And I'll now hand over to Anna to talk us through the headlines.
Thanks very much indeed, Will, and good morning, everybody. Thank you for joining us today. I'm Anna Brain, the research lead for Nest Insight's Housing and Pensions Project. And before I talk you through today's findings, I'd like to ask what you think about the idea of using pensions towards home ownership. You were asked when you came into the room if you might like to take a lollipop to indicate your preference or your thoughts around the idea. Perhaps we could just reflect that with a show of hands. So for those who think that the idea of using pensions towards home ownership is a good idea, let's see who thinks that it might be a good idea to use pension savings towards home ownership. And anybody who thinks it might not be a good idea? Anybody unsure? Okay, interesting. So it looks like we have quite a divided room. And as Will said, this very much reflects the experience that we've had throughout this research. When we started this project, many of us would have had to rely heavily on our intuition to answer this question. But over the past year, our objective has been to move from intuition to evidence. And we've done that through expert interviews, through modelling, through data analysis, through nationally representative omnibus surveys, and through discussion forums with members of the public, whose views are really important in shaping our own conclusions on this research. Overall, the evidence paints a similar picture. We found benefits for some, we found risks for many, and we found need for caution over unintended consequences for the housing and pension system. We're looking forward to sharing these and discussing them with you today. Before I go on, I just wanted to say a huge thank you to everybody that's been involved in this piece of work. It's been a huge effort, particularly to Richard Notley, who led the... Where's Richard? There, thank you. Richard led the data analysis on the project, to Vivian Burrows, who led the modelling, and to Jeanette Weir, who led the qualitative research. I'd also like to say a huge thank you to Will and the Nest Insight team, past and present, for all of their help, both with the report, with the event, with everything that's gone into it. And finally, to the enormous number of stakeholders who've contributed your time and your expertise to this work as well. We couldn't have done it without you. And we're grateful to see many of you here today. So, home ownership, why does it matter? Well, research consistently finds that housing security is a cornerstone of financial and wider well-being. And many of our research participants felt that owning a home is one of the best ways to secure it. 79% of non-homeowners in our survey said that owning a home one day is important to them. And of this group, 69% said they valued the long-term safety, stability, and peace of mind that home ownership could bring over and above any other benefit, including whether a home is regarded as a financial asset. But as we know, home ownership has fallen among working age groups over the past 30 years. There's lots of data out in the reports, but I wanted to share a couple of interesting insights with you. First, as we know, 45 to 64-year-olds today are more than twice as likely to be renting privately as those 20 years ago. This means that this group either needs urgent support to buy a home if they still have the time to do so, or they need affordable rent and help to understand how they might be able to plan to afford that rent through retirement. Our research found that around 1/3 of private renters over the age of 45, between 45 and 64, have owned a home before. So a lot of them in very different circumstances to some of the younger groups that we think about. Almost half of them expect to pay some or all of their rent from their own income, and yet 2/3 are not confident that they'll be able to afford that. Among 35 to 44-year-olds, we've seen the steepest and the most sustained falls in home ownership and the commensurate rise in private renting compared to any other age group. Just 56% own their own home today, compared to 76% 20 years ago, while 27% rent privately. So this group is arguably a priority for potential home ownership policies. In contrast, younger households, so those under 35, have seen a modest recovery in home ownership. So it's now around, it's quite banging, maybe it's me standing on that. It's now around 10 percentage points lower than it was 20 years ago. There's no certainty that that recovery will continue, but it is a sign of positivity potentially at some of these younger ages. However, there's an argument there as to where that increase is coming from. Around 1/3 of people under the age of 35 said that they expect to receive some sort of help towards a deposit from family and friends. 2/3 don't. So thinking about how to help those 2/3, this sort of policy, again, comes into a different one possibility. So what's a pension access scheme and how could it work? Well, first of all, we use the term pension access scheme to refer to any policy that might allow people to use pension savings towards home ownership. Broadly, we looked at 3 different ways that this could work in the report. There's the withdrawal model, where savers use, they take an amount of their pension savings out to use directly towards a deposit for a home. This is used in New Zealand, where 77% of first-time buyers last year accessed their KiwiSaver for a deposit. There's also variations of that in Australia and Singapore. The second is a pensions loan. I keep up with my slides. A pensions loan, which is similar to a withdrawal model, but in this case, they're required to repay that withdrawal within a given time period, plus interest, or they face some quite punitive tax penalties. This is used currently in the United States, where, as Will said, it looks like there may be some kind of intervention coming up to allow people to more widely access their 401k without those sorts of conditions. And thirdly, you've got pension pledging model. This is a little bit different because it allows people to leave their pension savings invested and use it as collateral towards a mortgage. It's used in South Africa, and while it was more popular among the experts and the public that we spoke to, because it removes the risk of having or reduces the risk of having a smaller pension pot at retirement, we also found a lot of concerns that it would be much more difficult and complex to implement. In the report, we look at the potential benefits and risks around some of these models, but there's a couple of points that I wanted to pick up on that we learned from lessons in looking at other countries. The first is that different countries use different ways to limit the amount of pension savings that people can use. I'd encourage you to have a look in the report at how that works. But the point being, there is no single one way of doing this. And actually, every system around the world that has some sort of pension access scheme operates it differently. So there's a lot of different variety in there. Within that, there are different ways that you can make the model more or less restrictive. And we certainly found that countries that have less restrictive models have much higher rates of take-up of a pension access scheme than those that are perhaps slightly tighter. And that means it suggests that the take-up of a pension access scheme is partly driven by need and partly driven by policy design. I think this very much reflects some of the findings that we take from the report, which is that there is one group of people, a relatively small group of people who might need to use their pension savings to get on the housing ladder, and a much larger group of people who might choose to. So how did we approach the research? Well, it's important to start by saying that we're looking at this through the lens of low to moderate income households. In this report, that means households earning at and below median income relative to their household type. So while there are risks and benefits for other groups as well, and many of the conclusions that we draw in this work are driven by our goal, which is to improve financial security for low to moderate income groups. So based on the UK pension system today, in its current form, we looked at 3 key research questions. First, could people benefit from being able to use their pensions to buy a home? Second, how many people might be able to do so? And third, how do people feel about a pension access scheme, and would they use it? First of all, could people benefit from using their pension savings to buy a home? To find out if people might be able to do so, we modelled the total annual retirement income for a couple and a single income household earning at the median for their relative group under a number of different housing scenarios. And again, it's important to say there's a lot of assumptions that go into this work. We've documented them all in the report, and there'll be an accompanying technical appendix that will come out shortly after as well. For us, total retirement income means state pension plus private pension income, less housing costs. And for renters, that's the cost of rent. For homeowners, there's a small maintenance cost that we take off there. We found that were households to rent through working and later life, this is based on median income, single person household, median income couple, working from age 22 and contributing at the automatic enrolment minimum until 68, were they to rent through working and later life, their total retirement income for a couple would be around £29,700, that's after paying their rent. And for a single income household, it would be around £10,000. So for the couple, this is just 63% of the Pensions UK moderate standard of living. And for a single income household, it's actually below the minimum income level. But what if these households were to withdraw £20,000 of their pension savings at age 30 and use them towards home ownership? Well, for the couple, doing so would potentially increase their retirement income to over £35,000 a year. And for the single income household, it would potentially increase to around £17,000 a year. I think on a relative basis, one of the interesting things to point out here is that for a single income household, the difference is greater because rent takes up a higher proportion of their household income compared to those who are living in a couple, for example. So you can see there's a really considerable difference here, that even though people have withdrawn a share of their pension savings to use towards home ownership in later life and potentially in working life, it means that they have higher retirement income. So, what happens if they hadn't used their pension savings to buy a home, but do choose to buy a home? So, those who would be able to buy a home without making any withdrawal from their pension pot, all other assumptions being the same, would have higher income at retirement than had they used their pension savings, had they withdrawn them. In this case, we modelled £20,000 at age 30. The differences for a couple was around £3,000 a year, so the pot was about £56,000 smaller at retirement. The difference for a single income household was about £1,800 a year, and their pot was about £36,000 smaller at retirement. I think the really interesting, the important point to remember about this is that you've got the difference between people who need to use a pension to buy a home. So this is the difference between the lifelong renters and those who use some of their pension savings. There's a really big difference here in terms of financial security in later life. You then have the comparison between the middle group and the last group, which is people who use their pension savings to buy a home versus people who don't. They just use regular cash savings, for example. The difference here is that they will have a smaller pension pot at retirement. So in this case, like I said, it's dropped by about $3,000 for a couple. But there could be financial benefits in working life. So if using some pension savings towards home ownership means that you can access better deposit terms, for example, or a longer term, then there may be those benefits. We don't model those benefits in our work. This is just looking at the size of the pension pot, but it is important to remember these people will have really difficult and complex decisions to make. And we heard that throughout the qualitative research. People said, how do I know if this is going to be good for me? So those are the situations and the trade-offs that they're facing. So, to wrap up on a couple of the points around could people benefit, overall we found benefits for some. Where it could increase home ownership, where using a pension access scheme could increase home ownership, we found it could increase retirement income and potentially also working life income as well. But we found that people do face the risk of losing their pension and their home if there is a default on the mortgage. Where using a pension access scheme might accelerate home ownership. I don't know what this bang is. Sorry. Is it the microphone? I'm going to get it a bit further away. Thank you. Where they might use it to accelerate home ownership. So this is the people for whom it's not going to be the difference between buying and renting through later life. There's the potential for greater financial security in working life But if they do withdraw that deposit, it also means that there is a risk of lower retirement income. There's also, again, that same risk that potentially if there is a default on the mortgage, they'd lose their home and their pension. For both groups, I think it's also really important to remember that overall, the idea of a pension access scheme does have the potential to lower barrier to home ownership of a deposit and potentially reduce housing inequality, particularly for those who don't have access to help from family or friends towards their deposit. But however, the challenge here is that, and we heard this again widely in the research, it doesn't address other barriers to home ownership, which are particularly prevalent around affordability and whether or not people would actually be able to secure a mortgage. So how many people might be able to use their pension savings to buy a home? Well, this is a really big question, and I want to start by saying there is no definitive answer. The number of people who might use their pension savings to buy a home, might be able to do so, will depend on many factors, including those related to policy design, lending products, markets, attitudes, and behaviours. We have a really comprehensive summary of these in the report. It's worth taking a step back for a moment, though, and just thinking about what people would need to use a pension access scheme. First of all, they need to be saving into a defined contribution pension or have one from a previous employment. This means that it could potentially exclude people who have DB pensions and potentially those, for example, who are public sector workers. Also those who might be self-employed who don't regularly contribute to a pension. This is something that in our research, actually, we found that participants were quite unhappy about, so it's just worth keeping in mind. Secondly, they need to have enough pension saving, and as Will mentioned, overall pension pots in the UK are relatively small compared to some of our peers internationally. We definitely see that bearing out in the research, that the number of low to moderate income households who might be able to use a pension access scheme is not particularly high. That might be yet, it may change in the future. And thirdly, of course, they need to be able to qualify for a mortgage on the property they want to buy and be able to pay that off ahead of retirement. We looked at several scenarios to understand how many people might be able to afford a deposit on the first-time home in their areas. So we took this regionality into account, which is really important when it comes to house prices. Based on a combination of cash and DC savings. So again, we used the Wealth and Assets Survey to look at the amount of cash savings that people have, the pension savings that they have, and how much that added up to together. In all the scenarios that we looked at, and there is a range of them in the report, we found that the number of people who might need to use their pension, a pension access scheme to buy a home, so this is the blue group, is much smaller than those who might already have enough cash savings under the same scenario to afford a deposit, but could choose to use some of their pension savings if they were able to. We found that the size of these groups ranged significantly depending on the scenario. We looked at a prudent scenario, a sort of baseline scenario, where we said that people could use up to 25% of their DC pot, in addition to cash savings, to make up a deposit worth 10% of the average first-time home in the region where they live. In this case, pension savings could be the difference between being able to afford a deposit and not being able to afford a deposit for up to 55,000 people. And I say up to really carefully because it's very likely that, for a start, not all of those people will be able to afford a mortgage necessarily. Not all will necessarily want to use their pension savings towards a home. And it doesn't fully reflect additionality in terms of housing and home ownership, because some of those people will be simply people that haven't been able to buy a home yet, but would otherwise go on to do so in the future. Now look at the red group, where, and I appreciate the text is a little bit smaller, but look at the red group. This is a much larger group of people who already have the cash savings for the same level of deposit, but they might choose to use some of their pension, perhaps to boost their deposit, perhaps to save some of those cash savings for other purposes. In this baseline scenario, that's up to 291,000 people. And again, with this particular group, there's no certainty as to the number of people in there who might do. It's just the number that actually meet these criteria that we looked at within the data. Interestingly, within here, 90% of them are higher earners. And even within the blue group, most of them, again, are higher earners. In the blue group also, over half of them are over 45. And that makes sense when you think that these are the groups that are more likely to have higher DC pots. Overall, we conclude that when you're thinking about how many people might be able to use their pensions towards home ownership, the data suggests that a large group of people will face risks from doing so. The number of people is overall difficult to estimate and depends on a really wide range of factors. We found certainly that the external factors, like smaller deposits, had a much bigger influence on the number of people that could use pension savings than the amount of pension savings themselves. Again, that's partly due to relatively small pension pots, but it also means that if you restrict the policy, then it means that you're potentially limiting access to those who need the most help. We found the greatest gains were likely limited to a relatively small group of people. And again, that's because lower to moderate income households don't widely have enough pension savings to make a difference. And we found that those who might choose to use their pension savings towards home ownership are a very large group and a potentially significantly large group. And this really is important when you think about the potential for unintended consequences that Will mentioned around the pension system and around house prices. So, how do people feel about a pension access scheme? Well, like us in the room, like all of the research we've found across the year, public attitudes towards the idea of a pension access scheme were mixed, they were divided, and they were nuanced. So I'd like to give you an insight into what people were worried about and what people were hopeful about. First of all, people were more likely to say it was a good idea if it would be helpful to them, and more likely to say it was helpful to them if they were in groups that found it difficult to save. People who were more likely to say it was a good idea were typically private renters and people who don't expect to receive help from family and friends towards a deposit. It was also most popular among 35 to 44-year-olds. And you'll remember from the beginning, this is the group where we've seen the most sustained falls in home ownership. Groups from ethnic minority backgrounds, it was more popular among. And higher income groups, interestingly. I wasn't quite expecting to find that, but higher income groups definitely were relatively in favour of the idea. It was least popular among homeowners and older age groups, but rather than necessarily framing that as that older homeowners don't understand the experience that people have today of buying a home, I think it's more helpful to think about it in terms of life stages, that pensioners take on a much greater relative importance at older ages. Younger people in our research said to us, a pension feels like it's a lifetime away. Why would I save it when I need it now? So I think it really reflects some different, it's much more complex perhaps than just thinking about the experiences that people have had of buying a home. People told us they were really worried about the complexity of making a decision around a pension access scheme. How would they know it was good for them? Where would they get the support to make the decision? What would that entail? What might happen if it went wrong? But at the same time, they also told us that they really liked the simplicity of the idea of saving through automatic enrolment. People said that they don't notice that they're saving into automatic enrolment because it goes from their salary before they see it. So from this perspective, several people said to us that it would really help people who otherwise find it really hard to save outside a pension. People intuitively weighed up retirement security against housing security. And I think that there isn't really one overall conclusion from that. I think people were worried about both. It wasn't so much that they picked one or the other. If there was one overriding theme, people were really worried about the unintended consequences, both for themselves and their own security and retirement, but also for the wider housing system. There was a lot of concern raised about the potential for increasing house prices. We heard that a lot of people expressed a really strong preference for preserving their pension savings for retirement. I know that will resonate with a lot of the research that people have undertaken in the room. But at the same time, there was also a group of people, probably a smaller group of people, who valued the flexibility. And they said, this is my money, I want to be able to use it in whatever way I see best. So there was definitely a tension between the two there. But I think that idea of preserving and ring-fencing savings for retirement, particularly because people were feeling that they had to take more responsibility for themselves and that the future was less certain for them, was a really big theme that we saw. Some people said that a pension access scheme would make them complacent about saving for a deposit, that knowing that a lump sum was available to them would mean that they made less effort to save outside of a pension for home ownership. At the same time, there were others who said it would incentivise them to save more because it might be the only way that they would be able to save for a deposit. So there were definitely two views there. This was a really interesting one. In the discussion forum, we talked to people for a week. So it was a certain set of questions every day. And we took them through the idea of their experience of home ownership or trying to save for a home. And this was all people who were either actively saving for a home or have bought within the last 3 years. So their experience is really relevant. And we shared lots of information about how it might work, what it might mean, what the scenarios might be. Huge thank you to Jeanette for this piece. And at the end of the week, we asked them if they'd changed their mind. And we found that almost everybody reflected on the week and had changed some of their views to some extent over that period of time. Some of them became more negative, so particularly some of the younger people who were really initially positive towards the idea, went away, thought about it, then thought about their pension. Some of them said when they talked to older family members, then that changed their mind. So this interaction, people were going away and thinking about it and discussing their views with others. Some became much more reserved about it, so initially thought it was a great idea and then looked at the complex trade-offs and the kind of risks that they face. Others became more positive, and some of the things that made people more positive towards the idea were finding out how much they might need to save into their pension to cover the cost of rent through retirement. So as Will mentioned, even just for a modest one-bedroom property, you might be looking at £190,000, for example. The fact that it's used in other countries was really appealing to people. They felt that that gave it a sense of sort of credibility. And also people really liked the idea of pension pledging over and above a withdrawal model. They felt that it addressed some of those concerns that they might have around retirement income. And lastly, we had a whole range of feelings that people shared with us over the period of the research, ranging from anger, real anger that people should even have to consider using their pension to buy a home, and also real concern that at the moment this might be considered as a choice, for example, but at what point does that choice become an expectation, where that choice is taken away from them? To hope. And 9% of private renters in the research told us that this was the only way they thought they might ever be able to buy a home. Some of them said, I never thought I'd be able to save for a deposit. I never thought I'd be able to manage. This might be a way for me to do it. So I'm going to skip over this slide because we'll move on to the panel because probably more interesting things to say than me. So overall, how would we conclude what we found from the qualitative research, how people feel about a pension access scheme? I think the overall message from this is caution around unintended consequences. So people were much more likely to say that a pension access scheme is a good idea if it would be helpful to them, more so likely to say it's helpful if they're in groups that find it hardest to save. Not everybody who might be able to use a pension access scheme would choose to do so, but people were really worried, like I say, about the idea of it becoming an expectation more than a choice. And lastly, people were most concerned about the potential impact on retirement security, house prices, unintended consequences. We heard comments through the research like robbing Peter to pay Paul. It's a sticking plaster for a wider issue. It feels like gambling with the future. So there's a real mix of views that are in there. And I think for me, this was probably one of the most insightful parts of the research. Before I wrap up, there is one final section I think it's really important to talk about. There is another group of people here. We've talked about people who might need to use their pension to buy a home and people who might choose to. There are people who will never be able to buy a home. And at the beginning of this presentation, I talked about the importance that people place on housing security. But throughout this research, people have emphatically told us that they don't feel they should have to own their own home in order to feel secure. One of our participants said the primary metric of housing security should be how many people have access to secure, decent and affordable homes, regardless of whether they own or rent. The final piece of the research from this year's worth of work will look at how institutional pension assets might be used more widely to support housing security through the supply of social and affordable housing. And we'll be publishing a short report, much shorter than this, in a few weeks' time. So, to wrap up, first of all, we find across the research benefits for some, risks for many, and the need for caution over the potential for unintended consequences that a pension access scheme might bring. We find that at the moment, those who need the most support do not widely have enough pension savings for a pension access scheme to make a difference to home ownership in our data. We do recognise, of course, that there are other benefits that it could bring during working life. This could change as automatic enrolment matures. There is some data in the report that shows what we expect pension pots to be, for example, in 2030, and how that might impact the balances that people could use towards a pension access scheme. And lastly, designing a scheme to target the groups who need the most help, whilst also minimising the potential for unintended consequences, could be difficult. And this would need to form a part of a range of solutions and potential solutions to support greater housing security for all. That's all from me. I'm very much looking forward to hearing the thoughts from our panel, and I'll hand over to Will.